In this video, I'm going to be talking about the top 3 stocks that I'm buying in October of 2021. Hey guys, it's Tanner Manson from Future Investing, and I wanted to explain why I'm buying these stocks. So mainly, it's because they're very underappreciated and undervalued stocks at the time. These stocks have been taking massive hits in the last couple months, and I think whenever Q3 results come out for all 3 of these companies, that they're going to see massive price changes. And for my portfolio, that's what I like to see. But before we jump into it, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, hit the like button down below to support the channel, and subscribe down below if you want to see more financial content just like this. Now, to start off this incredibly exciting and amazing 3 picks of stocks, first off, we have Skills stock, ticker symbol SKLZ. Skills is a technology company that allows mobile game developers to be able to monetize their content in a new way while still being able to bring that same fun and exciting gameplay for their consumers. Skills has created a tournament-style bracket that allows for cash-based transactions, and then whoever wins these small tournaments ends up getting rewarded through payouts. So if 2, let's say Tetris players want to go head-to-head for each other and put up $5 each, and then whoever wins ends up getting to take home, $9.50. Now note that I said $9.50 and not $10, and this is where Skills makes all of their money, right? They split a small percentage of the prize pool with the game developers, so they're also incentivized to, sign up with Skills because they can make new forms of money, as well as Skills takes a small cut as well that allows them to keep their doors open and allow for shareholders to make new profits. But aside from mobile gaming being the biggest and fastest growing, gaming market right now, there's so many other reasons why I think that this stock is so much more compelling than any other video game company out there right now. First off, being that the market cap of this company, or the overall size of every share added up total, which the share price is about $8 a share, would equal a market cap of $3.2 billion. Now let's go over some of their revenues and margins and everything about their business, the technical financial side, and actually see why that's one of the most undervalued companies on the entire stock market today. In Q2 of 2021, revenue grew to $89.5 million, which was an increase year over year of 52%. Yet whenever we look at gross profits, we got $85.1 million, an increase also of 52%. And yeah, those numbers are that close. That's because their gross margin, or how much they get to keep out of every dollar that they make, is 95%. Think about another company that makes that kind of money. I can't find them on the stock market. I don't know if there's any other companies that do. And what's funny is, like in Q1, for example, they did 94% gross margins. They're getting better margins over time, even though they have to expand into new markets that are all supposedly costly, but not for Skills somehow. They end up making more money out of every single dollar that they're making, which is continuing to go up quarter after quarter after quarter. And you might be thinking, like, how many people are actually transacting on their things? Like, I don't know if I would be willing to put $5 down just to play a game, betting like as if it was a casino. But a lot of people do. So for example, their gross marketplace volume, or the amount of money that they're actually bringing through the platform, in Q2 of 2021, they did $608 million. That was an increase of 47% year over year, which is just bringing in so much money through their platform. And yes, they're only taking a small cut of that. And that doesn't even include the $700 million in cash on their balance sheet with absolutely $0 in debt. I think that's just incredible. I haven't seen many corporations with 0 debt. You know what I mean? Like, I just went and filled up my car full of gas on my credit card, and supposedly I have more debt than they do. I don't know how this works. But these are the types of things that can happen whenever you have a company with a 95% gross margin. Like, it costs them nothing to continue to put out their service and everything. Like the way that this stock is falling versus what are the actual economic problems of the world right now do not add up. Skills is not affected by inflation because if inflation happens, there's just more money going through the platform. Now, they are currently at net losses right now. They don't actually make a profit, but that's because they want to grow their actual subscriber base and have much more people on the platform and not worry about the short-term gains of what you can make. They want to make sure that their platform grows over time. So they know they got their margins. They know they have a great company. Let's just worry about growing the subscriber base. We can make the money anytime we want. Just flick the switch and there you go. There's really no expenses to this company other than trying to grow the actual business, right? Through acquisitions, all these different things. So yeah, there's going to be net losses, but going forward, they can change that around like instantly. And I mean, this doesn't even include the 23% compounded annual growth rates that the market's actually growing at, and let alone like them not even getting into other countries, like going to India and all these different places, which have faster mobile gaming markets and, are growing even quicker. Yet no one's including that in the pricing of this stock. So if they don't even grow at an own business standard, let alone like the total addressable market will just carry them, for how much this company is actually going for. It is that insanely undervalued in my opinion. And it's not just my opinion, it's also the CEO Andrew Paradise's opinion, for which he actually signed a contract saying that he will take a bonus if he's able to increase the market value going forward. Now this is insanely exciting, and I did a whole video just explaining it. You can check it out over here if you'd like, or in the description down below. But pretty much, and this was signed whenever the stock was at $11.67. Okay, that's very important because now it's $8. But if he was able to 2 times, 3 times, 4 times, and 5x the stock all the way up to, I think it was $58.35, that he would get massively rewarded for each one of those milestones. And also included in that contract that he's not allowed to take any other bonuses other than this specific, contract that's, giving him compensation based on market value, which directly affects shareholders. Now that it's at $8 and I'm able to actually dollar cost average down all the way to, these sorts of prices, that getting up to the $58 mark is closer to a 7x now than an actual 5x. Even though that contract's signed, that's not going to get changed. So he's still going to be focused on getting it to that 5 times earnings. And I explained it in the video. He's going to make like $600 million if it happens. But it was very similar to the contract that Tesla's Elon Musk did, for which he hit all those milestones, which he was given a 10-year, time frame to do it, which he did it in less than 3. And for stock number 2, this is one that I've been covering a lot lately, which is Coinbase, ticker symbol COIN. Now, whenever you look at the crypto markets and taking over a $3 trillion market cap in less than a decade, it's gotten to the point where, crypto is being looked at as needed as being some sort of exposure in your portfolio to actually be able to stay in line with market gains. But my current plan with crypto has nothing to do with holding the tokens. It's all about Coinbase for me. My thesis for this is simple, right? Why buy the product when you can buy the distributor? Take a portion of every single transaction that happens in the crypto markets. That way you're still making a profit if, Bitcoin stays flat or if it even goes down. So currently, as of recording this video, the stock is sitting at a $255 share price, which makes up for a $54 billion market cap. That also represents a 19 times price to earnings ratio, which is still far below the actual S&P 500 average currently. Other points of notice in this stock is that institutional investors hold about 28% of this stock. A lot of it is retail, obviously, because crypto still does not have that regulation that a lot of institutional investors want to see. But yet, even with that small amount of institutional investors, you're only seeing about a 2% short interest. So although people might not be betting for the stock right now, nobody's betting against it. Now, whenever we start jumping into the numbers in this company, this is where things get insanely interesting. For example, whenever we look at the number of actual Coinbase users, we went from in Q1 of 2021, okay, this was 3 months ago, we went from 56 million users into Q2 of 2021, which was 68 million. Okay, that's a difference of 21.4% in the matter of 3 months on their overall total business. That doesn't even make up the full year, okay? So if we continue to grow this way, the PE ratios are going to drop like a stone, let alone if Bitcoin or any of these prices are, would be rising, which they are dramatically right now. But that's only one data set, okay? Let's go into actual monthly transacting users. These are the people who are actually, not just signing up for the platform, but also doing real business on the platform. So for monthly transacting users, and this is Q2 of 2020 to Q2 of 2021, okay, year over year. For 2020, we have 1.5 million users. Q2 of 2021, we have 8.8 million users, an increase of 487%. Trading volume, whenever we look at the amount of billions of dollars that from, year over year, which has been traded on the platform, $28 billion in Q2 of 2020. Q2 of 2021, $462 billion, an increase of 1,550%. Just a reminder that this stock is trading at a 19 times price to earnings ratio, okay? Much lower than the, the normal stock market, yet it's growing at, 4-digit percentiles. Assets on platform, though, let's continue in the billions of dollars here. Q2 of 2020, $26 billion. In Q2 of 2021, $180 billion, an increase of 592%. I mean, come on, guys, this is ridiculous. Like, what are these numbers? And you know what? Crypto continues to rise, over time, which might even keep up these, assets on platform, especially if, new users and everything are coming to the platform. It only increases how likely that people are going to be trading on the platform, are going to be, sending money back and forth, adding new payroll, all these new features that they have to bring on new money into the platform, or even, new institutions being able to actually pour their money, which is called actually a custodial fee. We'll hold on to a company like Tesla, for example. We'll hold on to their Bitcoin for them, keep it very safe on our platform, and we'll only take a tiny fee for that. That's called a custodial fee. These are the types of things that Coinbase can do that if you were just regularly holding Bitcoin or Ethereum, that you could not make that money. And that's only one version of that. For example, we have all sorts of things: transactional fees, custody fees, like I said, financing, interest rate farming, Coinbase Cloud, which is supposedly like the AWS for crypto, where they're giving tools and abilities to make new sorts of cryptos on their platform, or even Coinbase Ventures, where they're investing in the newest sort of platforms in this sort of space. Some of their biggest investments being OpenSea, okay, the big NFT platform that everyone's using. They were an early investor in that platform. BlockFi, Compound, for example, all these different platforms that are growing like crazy, that they got in at early stages and are benefiting off, just the expertise in this crypto market. For example, I think that this is a whole new market that people have to have some sort of exposure to, or at least investors like myself. And you know what? I want to take advantage of this new market, and I want to keep up with market gains. And I think buying the farm versus buying the corn is a lot better way for me to get into this market and still take advantage of profits that are going to happen in this whole new space. $3 trillion in a matter of a decade cannot be ignored. But anyway, that's just my take. On to stock number 3, we have Palantir, ticker symbol PLTR. Palantir Technologies builds and develops software platforms for both government and commercial applications. They're trying to become the central operating systems for everything data. This allows users to be able to actually integrate and analyze their data all in one place. This also helps with finding patterns that are hidden deep within massive amounts of data sets, and then actually allowing, whether it's governments or commercial business, to actually make, real data-driven decisions based on what Palantir is telling them about these sort of patterns and how they can sort of build on their businesses or governments going forward. Now, on to the actual nitty-gritties of the company. So first off, their market cap is about $46 billion, which actually makes up a share price of about $35.50, but just a couple weeks ago, not even about a month ago, this stock was at like $29 a share. And I mean, this is obviously why I'm putting this stock on my actual list, is because, well, I think it's closer to that $29 a share price, right? Because we're seeing so many massive developments in this company just recently that I think boost the price of this stock dramatically, yet the price is not even changing right now because of, uncertainties in the broader market. Now, with all those new contracts aside for now, just even their Q2 results were just absolutely mind-blowing. Like, they did an amazing Q2, and yet the stock hasn't really moved ever since then. I mean, it is moving. It's going up and down like a toilet seat, but I mean, it's staying low right now, and it might be an opportunity to buy for at least my portfolio, here in October. Looking into Q2 revenue, we got about $376 million, which was actually up 49% year over year. Let's look at actual contract value booked, which is like what these are the length of the contract. So although we're not getting the revenue this year, it's going to continue going forward. And for that, we saw about 175% year over year growth. And I mean, even the commercial side has been blowing up like crazy. And let alone, we will talk about these latest contracts. Like, I know I'm pushing it off just a little bit further, but I do want to get this out before I talk about what's happening, next. But even total commercial customers, for example, quarter over quarter, this is not even year over year, grew 32%, okay? Even from Q4 of 2020 to now, like Q2, just a half year, we saw a 61% increase in their actual total commercial customers. And the reason why that's so important, and less why I think a lot of people actually focus on just the revenue and why they care so much about the actual, contract value booked and new customers, is because they go off really a 3-step system: acquire, expand, and scale. Acquiring is allowing the people to have their software for almost free, allowing them to see why they need it and why it's so beneficial. And, Palantir software is beneficial. And so obviously, once people get a little taste for their product, they sign up and then they start to expand their contracts with Palantir. Once that happens and they get, them really, hooked onto this platform, that's whenever they go into the scale phase and actually try to bring out that, increased revenue out of these larger and larger clients. And that's really where we make all of our money, is in that scale phase. So it takes a little bit to get the ball rolling, and why, a lot of this is very long-term sort of opportunities for Palantir. But whenever it sort of happens, you start to look at, the commercial customer growth and the government, growth over time, you're going, oh my God, they're pushing out these longer and longer contracts. at way bigger prices. Going forward, this is going to be a really, really big company, and it starts to make, sense of why these sort of P ratios and the higher valuations for this company actually do make sense. I mean, just the average amount of revenue that they take per customer went up by $8.8 million. This is excluding new clients. So it's not like we got bigger clients. This is already existing clientele have increased the amount of business that they do with us by 9% quarter over quarter. This is not even year over year. Quarter over quarter by 9%. And it also just goes to show you that whenever we are actually growing these customers and everything like this, because we are a tech company, I know some people like to consider this company closer to a consulting business rather than a SaaS business, but it really is a SaaS company, a software as a service, because obviously they have adjusted gross margins, or this is in Q2, of 82%. But yeah, those margins are just crazy. And now, whenever you add on to these new contracts, which finally I'm getting around to, of the newest one with the U.S. Army of $823 million of this contract that they won a vast majority of. That's just insane. And yet the stock price didn't even move on this news. I mean, yes, it actually did. It went up 10% and then lost all that value. But just because the stock lost the value doesn't mean that we lost the contract, okay? So these are opportunities here. Whenever the stock actually should have moved 10%, because this is our biggest contract that we've ever closed. It's bigger than our 9 biggest contracts all put together equal up to $788 million. Whenever we add in this one of $823 million, this blows away everything. So there's been a lot of, bearish sentiment come out saying that, oh, we haven't seen a new government contract lately, or we haven't seen anything. But some of these contracts are $5 million, $10 million, and yet people get so excited and the stock moves so much on just these small contracts. Look at the size of this contract, $823 million. That makes up for everything of any piece of news that we didn't get in the last year, There still are tons of new contracts that are coming in, and this is not being priced into the stock at all. The stock is staying flat. I mean, the next biggest contract that we had, it was $250 million. I would think that the company would move on an $800 million, contract being finished, but I guess, or they're not finished, but into the next stage is some bit of news, right? I mean, they went up against 6 other companies to get that contract, and they won out of all of them. And yet that doesn't pose some sort of technological advanced, sort of sentiment to the company, as if, whenever we go up against these companies, that we continue to win over time. Like these contracts, bang, 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 we're winning them all. And that's because even Cathie Wood said it, that she thinks that the technology at Palantir is 5 years ahead of any other company that might exist today. But the numbers speak for themselves, right? I mean, you don't increase the amount that you're spending on this business quarter over quarter at such massive rates if you're not absolutely loving and then needing the product going forward. And I mean, all that aside, even the smaller details are even, super impressive as well. As Q2 of 2021, they had $2.3 billion in cash with $250 million in debt. Great balance sheet looking forward. Insider holdings, like the amount that, the CEOs and all the co-founders like Peter Thiel and Alex Karp and all these people are holding the company, is still holding a 12.78%, portion of this company. That's a massive amount for a public company to still have being owned by the founders. This means that the largest part of their success going forward is going to be based off this company. If I don't have some of the smartest people right now working for my money, that's so amazing to have. They have such a massive financial, incentive to work hard for my money, the stock that I'm buying at really low prices right now. And then even whenever we look at things like total addressable markets in this company, they say that this company will have a total addressable market of about $119 billion. And the way that they're winning contracts, increasing them over time, that total addressable market is also going to get bigger as the years goes on as well. But basing this company at way less than that, at $46 billion market cap, and that also includes multiples of the amounts of money that it actually is making right now. They're taking up a small fraction of how big this total addressable market actually is. And that's only for the amount of products that they have today. They've also increased their amount of products, as they get into new products like Foundry, for example, is decently new. And then Apollo and all these different products as they're slowly, building on and getting bigger and bigger, that increases their total addressable market. That's only for Q2 of 2021. So to round it all off, I think Palantir has a cult-like following, okay? One that, people are following every single financial comment or new contract or everything. That way you get a real insight into what this company is doing on a day-to-day basis. I mean, it even gets to a bad point where people are sharing online about Alex Karp doing trail runs and stuff and talking about how this might affect the stock. It's out of my mind how crazy people get. But that was also a very similar thing to what people were doing with Elon Musk and Tesla. Cult-like stocks can do very, very well because it keeps those founders on their toes. I think Palantir is going to take a similar path to Tesla, whether it's as explosive in the amount of 12 months or, over the next 5 years or something like this. I do think it's going to be a massive multiplier, on the amount that I'm holding it on right now. Comment down below if you have similar picks to me or what you're actually picking or what I should look into differently for my portfolio. Like the video if you haven't already, it really does support the channel, and subscribe down below if you want to see more financial content just like this.